Star Boxer Rescue is a nonprofit organization serving Montgomery County and surrounding areas, dedicated to the health and well-being of the boxer breed. Lone Star Boxer Rescue is run and managed 100% by volunteers since 1999. Our main objective is to rescue, rehabilitate, and rehome boxers that come to us from many sources, including local animal shelters, owner surrenders, and strays. For more information about Lone Star Boxer Rescue, visit our website at lsbr.org.
Thank you for listening to Lone Star Community Radio. This program was broadcasted and recorded live from the LSCR studios in downtown Conroe, Texas. Lone Star Community Radio is supported by listeners like you. Donate and sponsor today. For more information on getting involved with Lone Star Community Radio, contact us at lscrstudios@gmail.com or visit us online at www.irlonestar.com.
You are listening to Lone Star Community Radio on 104.5 KCZW LP Conroe and 106.1 KZCC LP Conroe and worldwide on irlonestar.com.
Good afternoon, everybody, and thank you so much for joining us on the Cindy Cochran Show. If you're just listening to us on 106.1 or 104.5, you have got something that will fill your ears and your head and your knowledge and just make you feel like, okay, I can sit down and talk to the guys at work now. I understand what's going on. But actually, it's just trying to get a hold of some of the facts, and that those facts may help you make some decisions and that kind of thing. And that's why we have a great sponsor and guest today, Chris Wootton, which we love, and we thank him every day on the show for being our sponsor. We will not forget that you came in and you just bolstered us up like Chase is bolstering up some of those banks, other banks out there. But we thank you so much. But anyway, I do want to say that yesterday we had our signing show. On Tuesdays, it's all dedicated to the deaf. And so we sign everything. And so I had a CODA. A CODA is a child of deaf adults. And so she's an expert interpreter, and she was great. And so many of the deaf know her. So it was wonderful program. And I've had so much fun and frustration trying to find people that would come on the show and try to explain what we're going to do, and it's on radio, and they're trying to think, wait a minute, it's on radio, but my friends can't hear it. But we explained to them, that it's just streamed and you see it on YouTube. And YouTube, understand YouTube, okay. So anyway, I just want to thank her again. She was just great. So we're going to now introduce our special guest, Chris Wootton. He is the owner of Wootton Financial Group, and they're right down the street. They've been here in Conroe for, over 2 decades. Is that right? That's right.
Fair enough.
That's fair enough. But you don't stay that long if you're not doing the right thing, or people are mad at you and they're saying bad things about you. They don't. And so anyway, and there's been 2 times when we're talking about the sponsor, Chris Wootton, and our guest knew him. He was either lived in their neighborhood or they knew him from him coming into their establishment. And I'm so used to signing from yesterday, my hands shut up. Okay, lay down. Okay, so.
That's impressive, by the way, that you can talk and sign at the same time. And
well, it's a good thing I started learning that way, because that's doing interviews and things like that. You need to know that. But a lot of people only sign and they go like, I can't talk and sign at the same time. That's not possible. Whether I'm doing all the right signs or all like that may be different. But I fake it. No. Anyway, so I love the fact that Chris is such a good neighbor, and he's a good person that people have said, oh, yeah, I love Chris. He's so good. He's such a good man. And so we have him on the show. And I had him on because he is so involved in the financial world because of his clients and people that come in there and asking for advice. And so he's someone I feel like probably knows more about than I do, but I do listen to Fox News. I have stayed at a Holiday Inn, so I feel like I'm right there ready to question him. Chris, thank you. Welcome.
Thank
back.
you. Yeah, it's glad to be back.
I
It's
know
always
it's-
fun coming on the show.
Well, it was only like a week or 2 weeks ago that you were on here.
Feels
and
like it,
Yeah.
Been
And
a while.
I thought, I don't think it's too soon to have him back because
I appreciate that.
he would you would know. And so a lot of stress, a lot of angst is going on in the world today, and maybe not necessarily in Texas, but it makes us feel like it's everywhere. And so I just need to understand: should we feel safe? Should we just do a lot of investigating? Should we know what's going on in the bank that's holding our money, and we need to go talk to them? One bank said, I have people in here every day, and I have to spend talking to them and talking them off the roof and all because of the nationwide problem scaring them so bad.
Well, what I would say to the community bank employee is you need to have your corporate staff, depending on if you're regional or one of the big corporate East Coast banks or whatever, you need to have corporate communicate with your depositors better. Okay?
Very good.
Part of the problem is that people don't know and they don't understand, for example, what has caused the problems of the meltdown of these, primary three that are in the news, but certainly the questionable aspects of the industry at large, broadly, not just here in the States, but also globally. There are large institutions that are, for lack of a better term, backbones of global banking. Okay, it's what allows capital to flow between nations, between businesses, between individuals, whatever. And people they just don't understand how the system works and what the risks are in it. So if I were a bank corporate, I'd be saying, hey, here's our balance sheet, and here's how to interpret it, and here's what it means, and here's what would have to happen for it to go sideways. Right?
Oh, you're right. That would be great.
Will they do that? I mean, I'll give you an example. People are probably familiar with Amity Bank. My family banks at Amity. They're owned by Zion Bank out of, I think, Utah. They're considered one of the large regionals, that you hear talked about in the news. Well, a few days after the whole stuff in Signature and SVB and so forth went sideways, I'm getting an email from them. Here's our capacity to borrow if it ever came. We have a strong balance sheet. Meaning they were trying to put at ease their depositors. They didn't go into great detail. Thankfully, I have the ability to go in and see that to some degree, but at the same time, I also understand how the banking systems work, and that, I think if people understood it a little bit better, it would help put them at ease a little bit.
Good.
Okay. Certainly the news doesn't help because you got to remember news agencies, whether it's Fox or anybody else, okay?
Right.
What's their number one goal and job?
Is to get eyeballs on them and
that
grow
gets
that number.
them what?
Money from
Okay.
advertisers.
So it's about ratings.
Yes.
Okay. Anytime you watch any show and they're looking you in the eyeball and they're saying, we just want to inform you. We just want, okay, that may be certainly part of it, but at the end of the day, their job is to make money. And they make money by getting increased ratings. And they get increased ratings by stoking emotions, primarily fear and greed, especially if you're talking about a financial stock type talk show. And look, I'm not down on any of that. It makes for entertainment to a large degree, and certainly there is some information buried in it. But part of the problem with what we've got going on in the banking side of things right now is the one thing we don't need is for people to lose trust in the system and be fearful.
Right.
Because when people are in that state of mind, they tend to make really, really, really poor decisions. Okay.
Right.
That's one thing we don't need.
But I think that it's where the branch banks usually have lost so much of the youth because I mean banking, going in and standing in line
Sure.
and always getting the wrong line and trying to bank because they don't see why in the world would you do that when I can go online and I can send if I have to get a check deposit, I can do all of that stuff. It's all done online. And so they don't even know what a branch bank really is and what's going on with that because other stuff's on the internet. And I think that's one thing that Mr. Wonderful from the Shark Tank was pontificating is that because the youth are not going to be using these branch banks, that it's really a waste of brick and mortar, and that those are all going to go away eventually. And that was his prediction.
Yeah. Well, I think there's a lot of truth to that. Okay. I mean, you got to remember there's always another generation coming up.
Right.
Okay.
Right.
And those generations are getting more and more and more technologically inclined and advanced.
Mm-hmm.
And it's true. If you think about even the way you bank today, you use a debit card, you transfer money from one account to another all online. Okay. You can do all of that. I would venture to say 95% of what we do, even those of us that still, dirty word, use a checkbook.
Ooh.
Okay.
Ooh, don't stand in
my
line.
kids don't even know what a checkbook is.
And don't
okay?
stand in line at a grocery store and pull out a checkbook and start writing because the groans will happen all the way down the line.
But my point is that Kevin O'Leary's right in the sense that the whole world is going more digital.
Right.
That's part of the whole blockchain conversation, which I won't go down that rabbit trail, but a lot of what much of the future of this type of stuff is going to be built on is that blockchain. Okay. And banking's going to go right along with it. So yeah, I mean, there could come a day and time where bank branches and things like that become completely obsolete. I think there's a part, depending on what part of the banking you're doing, that may always need to be there. Because I do think that people at some level, there will always be people that just desire the trust arrangement of being able to look somebody in the face.
Right.
Okay.
And you know who that is? Sam.
Yeah.
He has to do that.
But even if I go down that road, it could be a matter of not at a physical branch. It could be, a Zoom meeting, looking at each other eyeball to eyeball. Those kind of comfort levels change over time as technology becomes more adopted, right?
Well, like the branch banks, they also handle loans and small businesses and things like that, right? So that seems like they have to have a face-to-face meeting or be in touch with the bank. So maybe they'll specialize, or there'll be different, where you don't do all your banking like the regular banking and checks and when they bounce and things like that, and that you don't have to really look at them in the eye anymore. You just send some money in.
Well, I mean, even that side of it, loan departments and, applying for a mortgage, whatever, it's already in the works. They're trying to digitize all of it where, for example, through blockchain, you could have a smart contract, literally from front to back, instead of having to sign 4,000 pages and, giving them the name of your firstborn and whatever to get a mortgage. It's all done digitally, okay? And you can execute a mortgage or a smart contract anywhere globally between institutions in the blink of an eye.
Well, are there signs that we can, as depositors, not saying we're not on any board or we don't have stock in that bank or anything, but that there's signs that you go, this may be too risky, or they're taking too much risk and they're using my money to do that. Yeah,
well, let's back up a little bit. Okay, so I think it's important for your listeners to understand. I mean, how many people, if you ask them, how does a bank work? Okay, so our country, our banking system, operates off of something called a fractional reserve banking system. So if I were to ask you, what is that? Could you explain it?
It doesn't seem like a whole. It's a fractional thing. I don't know.
Okay, well, it's got the word fractional.
Yes,
That makes sense.
right.
Richard, what would you say? Do you know? Okay. So here's kind of the bottom line. And this is going to be very high level.
Uh-oh.
Okay.
You see, Richard just put the mic to his mouth.
If you think about the name, fractional reserve banking system, it means that only a fraction of the bank deposits, that's the money that, John Smith, Susie Q, whoever, goes down and deposits into the bank, only a fraction of that is required to be available for withdrawal at any given point in time.
And did we know that? I don't think I knew that.
Now, so the question most people ask is, well, then where's my money? Okay, well, the bank takes your money that you deposit, they invest it, they loan it out at a given rate of interest to make money on it. And then typically, if their balance sheet is being managed properly, they're going to have some level of liquidity and cash on hand, for typical day-to-day withdrawals. Okay. Now, the reason that works, they set it up that way because if you have a system that's structured that way, it allows for expansion of the economy at a much faster and more reasonable rate, meaning business transactions and so forth. And it's not just the U.S. Most of the world's banking systems are kind of structured in this format.
But why don't they tell us where our money, like send out to depositors, where we're going to be investing in, what we're going to be investing in? Do they feel like that's none of our business? Or
Well, they're a company. Most of
Yeah.
them are for-profit businesses, obviously, and so that's up to them and their board of directors and shareholders and so forth. But you can see it. Now, you might have to educate yourself on how to make heads or tails of it, but especially publicly traded companies, they post financials, they post earnings, they all of those things. So you can literally go see what's on their balance sheet. They're audited typically annually. They have to produce an audit, or audit report rather. So there are ways to go out and see some of it,
what
right?
they're doing.
But you may have to do a little bit of digging in terms of, okay, well, how do I know if they're really sound or whatever the case is?
Right.
Okay. But the bottom line is if you understand how the system works, then you begin to understand why things like FDIC protection are necessary. Okay. If a bank, whether it's for one reason or another, if it gets into trouble, then you have protections up to a certain amount by an insurance program called FDIC. Okay. And that insurance, that's really what the average depositor at a bank needs to kind of cue in on, right? You don't necessarily have to understand a balance sheet and all the financial detail and minutia. If you'll just do the simple level of risk management that you can do, which is you don't hold $50 million in an account at a bank that's only insured in that account for $250,000. That's part of the reason.
That's true.
SVB, Signature, okay, we could go down the line. Now, there are reasons why the bank got into trouble. That's true, and we can talk about that. But the point is regardless of what the reasons are, had they been doing proper risk management at their own personal and corporate level, meaning the people banking at the institution, we wouldn't even be having this conversation, okay? Maybe we'd have the conversation of the bank failing, but people losing all their money, or more importantly, the federal agencies like the Fed and the Treasury and FDIC coming in and breaking their own rules to keep these people whole like they did in 2008.
Yes.
Okay? Those kind of things wouldn't have to occur.
But like Chase was one of the ones that are coming in to help prop up.
Well, a lot of your big banks, okay, so the larger banks that have a stronger balance sheet, more liquidity, those kind of things, a lot of times in these types of events, the government agencies will go to them and, try to get them to help out. And that may mean they step in and literally buy a bank. I mean, if you look at 2008, right, you saw a lot of that kind of thing happen. For them, sometimes it can be a really good deal because they can step in and, in the case of one of the banks, I think it was, I can't remember now. I've got it somewhere in my notes, but one of them got purchased for literally 99% discount for going in and buying
and to buy it.
So my point is that, there's a lot of points.
Well,
and we can go through those one by one.
No,
if you want.
but I heard that that these banks went in to prop them up, and they're bringing in so much money, and one bank wanted to buy another one, and they had depositors and stockholders and all that. That shouldn't they vote on that and say it's okay, go ahead and prop up that bank, take our money and help them, even though it was their stupidity or not their oversight or not, and taking too much risk.
Because you're supposed to understand the rule going in. Right?
Is that what you are informed of? Like, what we could be doing is things that we're not going to be maybe telling you all the time what we're going to be doing, but we think this is going to be best for.
Well, if you're talking about how they're investing and so forth, I mean, if you look at some aspects of, take SVB, for example, a lot of what they were investing in were very safe and secure government securities. Safest asset around, okay?
Right.
The problem is that they bought them when interest rates were historically low. The Fed began raising interest rates. That causes the price of a government bond to fall. And now they have a 100% safe, if they hold it to maturity, long-term, government bond. But if they get in a situation where they need to sell it to raise capital to meet withdrawal demands, and the value on their balance sheet has dropped because of interest rates going up, thank you, Federal Reserve.
Yes.
That's one of the issues that caused the problem. They had losses in all of these assets on their balance sheet that they didn't have before, okay? And there's a whole line. I mean, maybe it would be helpful. Of course, it's your show, but
no, please.
It might be helpful for us to maybe just step back and look at the bigger picture, okay? So essentially what you've had is the collapse of 3 FDIC-insured institutions. You've got SVB, you've got Signature, and a company called Silvergate, which was a crypto deal. But essentially when these things collapsed, you begin to hear these rumblings, it sends depositors kind of scrambling, looking for a place to repark cash. Okay, meaning in other banks and other brokerage companies, they're pulling money out of these institutions and rushing somewhere else to try to put their money back in. And it's due to fear, whether it's grounded in reality or not. There's a fear contagion that begins to take hold about the stability of not only these banks that have subsequently gone under, but also other regional banks or small banks, locals, right? Once that fear contagion begins to snowball, you can really very quickly end up with a run on many banks where people are just completely losing it, freaking out, pulling all their money out of their local banks. Well, even banks that are well capitalized with plenty of liquidity per se for a normal market environment, in a case like that is going to have trouble meeting liquidity demands because the system is not designed for everybody and their mother to go pull money out of a bank all at one time.
Right.
That's not how the system's designed. It's a fractional reserve system, okay? So this then, remember, bigger picture, this then prompts federal regulators to essentially rescue depositors, not just at the limits, but in total, okay? Meaning they step in and they offer this lifeline to backstop all of the deposits, especially like in SVP's case, so that nobody loses. And that immediately caused global aftershock because if they're going to go violate their own rules on how much protection they're offering. That immediately says to anyone who's smart enough to look at it, okay, they think that there's a bigger issue at hand here. There's a bigger problem. And so they're trying to alleviate, and that's eventually what we found out. They were afraid of a systemic contagion, okay, where this begins to happen at bank after bank after bank after bank, and then it grows into a problem that they can't stop.
Right.
Okay. I tend to take, this is my personal opinion, I tend to take the other side of the coin, and I can give you reasons for it, but they should have let the depositors fail. And I know people are going to hate me for saying that.
No, that's what Mr. Wonderful said.
But it is what the rules are. And you can't tell me that a tech company with the brains of people that design that kind of stuff, that are in that space, that are designing all this technology, I have a hard time believing that they don't know what their FDIC limits are and that they don't know how to spread risk among multiple banks to do that. If not them personally, they have got to know people in their circles of influence that do.
Right.
Okay.
But isn't that just a laziness and just a, it hadn't happened for years?
Well,
so
I think it's more,
now.
it becomes more of the, I mean, if you think of SBB, it was really kind of the go-to bank for tech capital and things like that. Okay. And so it's word of mouth, and so everyone has their money there. I mean, there were hedge fund managers there. Peter Thiel, like the day before it collapsed, had, I think it was $50 million on deposit there. And he pulled all of his money out and told everyone he knew, if you got money there, take it out. I think something bad's getting ready to happen. Okay, well, here's a hedge fund manager with a ton of money in a facility well above FDIC limits, right? But he probably knew the risk he was taking. And when he saw the risk coming unwound, meaning something is not right, something's going on. This was about the time they're saying, okay, we're going to try to raise money through a stock issue. They start trying to raise capital because they don't have the money to meet all the withdrawals they were experiencing. He knew something was wrong, and he got out. Okay, so point just being, it started this, in a big picture, this kind of devolving of the system over some of these individual banks. So then, as a response to the U.S. bank collapses, okay, especially these first three, then you had a Swiss bank, Credit Suisse. Now, they already had troubles of their own. They were already in financial turmoil, trying to raise capital. They had, been through the ringer. They then had depositors panic and begin to ditch them as a bank, meaning they start pulling their money out, right? Well, as a result of that, and that's an important one because Credit Suisse is what's considered a systematically important global institution.
Right.
Okay. They were forced by Swiss regulators into kind of an arranged marriage, if you will, with one of their larger Swiss rivals, UBS. You've heard of UBS Financial, okay?
Yes.
Well, UBS essentially got to buy them at about a 99% discount. They just stepped in and bought Credit Suisse, okay? Problem solved. We think, we hope, right?
Right.
Here's the thing. Nobody really knows how deep systemic issues are within the banking system. And look, that's not just, big banks. The biggest concern they have right now is with regional and small regionals banks, okay? They just don't know based on, if a systemic fear contagion type thing happened and you begin to have multiple runs on multiple banks, they don't know how deep it would go, right? Because it depends on how bad the runs are as to how far and how widespread it would become and how bad. But that's one of the reasons the regulators stepped in their opinion, and violated their own rules and backstopped all of these people, is because they did not want it to become systemic, okay?
So you're saying okay, I'm a horrible example of any of this because I'm the one that may check their balance at 9 o'clock at night or something, just going through and seeing, okay, now what did I spend today? And realize I've got about 15 minutes to get down to that bank and and deposit a check because I don't know how to take a picture of the check, and I don't know what to do with that. So I like going up to and seeing what I've done, and it's not much, but it's just to cover that. It's just to cover that, and so I'm not anybody that they would even look at or worry. Now Sam may be different, and he may have a more respect about what he's going to do, and so they're not going to cover anything that I had deposited in the bank, and if they're going to go under, they're not going to go under with because of me, but people pulling out money where it's not up to $250,000 is what they're insuring. Is that correct? They insure FDIC insures money up to $250,000.
So it's per depositor,
right?
Per account,
right?
Per institution,
right?
Okay. So let's say somebody, and when I say institution, I mean bank,
right?
So that doesn't mean, well, I run to 4 different branches of Amity, and therefore I have 4 times. No, it's that Amity is a institution,
right?
Okay. And I'm using them just because that's where I bank. But I mean, bottom line is it could be anybody, any bank, right?
Right.
But it depends. You can have more than $250,000 worth of protection. It depends on the type of account you have. Meaning, for example, if you're an individual and you have a checking account, all right. So let's just use you as an example. Cindy can have a checking account. That checking account is in your name.
Right.
You have up to $250,000 worth of FDIC protection. Okay. Now let's say Cindy has a savings account. Well, guess what? That is per account, per institution, per depositor. A savings account is not a checking account. It's a savings account. So you have another $250,000 in that account. Okay. Let's say that Cindy's married, which you are,
yes,
and you have a joint account. Well, you and your husband would be covered per account, different title, joint account now in 2 names, $500,000, $250,000 each. Okay. So it is possible to have money in a single institution above $250,000 that is protected depending on how the accounts are titled. If you had a trust account, for example,
right,
that's another $250,000. Okay. So depending on how you have them titled and broken up, you can have more than $250,000 in a given institution and still have some decent protection. Okay?
Well, I think, because they say the majority of people are just making it paycheck to paycheck. And so they kind of laugh at, boy, if I had $250,000 somewhere, that would be great. But I only have like maybe 500 right now there. Yeah. And I just want to make sure that that's covered and it's fine.
Well, I mean, the average, let's just put it this way. The average Joe depositor and his spouse, okay, with most banking institutions, is nowhere near the FDIC limit.
Right.
Okay. Now, the problem that SVB, that type of risk management that they had, and that was really their biggest issue, was they had really poor risk management of their balance sheet at the bank. SVB was completely different from your typical regional community type bank. But because no one knows for sure what everyone's balance sheet looks like, right? Without going and doing a lot of digging and investigating, that's where a lot of the question is, right? How much risk would it take, or risk, not the right word, how much of a run would it take on a given bank to cause it to start to have liquidity issues, okay? But SVB's biggest problem was it had a, relatively speaking, okay, so it's the 15th largest bank in the country, but relative to other banks, it had a really small pool of depositors with really large amounts on deposit.
Oh, and that weren't
Whereas
covered.
Other banks, typical banks, have really large numbers of depositors with really small amounts of money on deposit. Okay, so the chance that a typical bank, is going to have enough withdrawals on a given day for it to cause a liquidity crisis within the bank is slim to none. But it can happen. right?
Right.
And that's what the Fed and those agencies were trying to prevent, was a systemic issue that even on a normal, well-capitalized bank caused them to have problems, just like SVB would have problems. Okay, so does that make sense? Kind of.
Yeah, and I know you get happy when my eyes look like
When they're glazing over.
No, no, when it looks like, okay, she understood that. It looks like the rest of it.
I just got this vision in my head of all your listeners just literally going to sleep right now. They're just like, this is boring.
No, not if you have money in the bank. You want to know, is it safe? They want someone to say, everything is going to be okay. Don't worry. Texas is strong, and we got enough. We'll just start pumping more oil or something like that. Will be okay.
Yeah. So you got to keep in mind that a lot of banks, especially if they're what they call regionals, meaning they may have locations in Texas, but they probably also have locations elsewhere. Okay.
Like Wood Forest. Wood Forest is it only in?
I don't know.
In Texas? Okay.
Yeah, I don't know.
Because I saw their picture up on the screen. It scared me. I thought, oh no.
Yeah.
But they were just talking about different banks and the regional banks.
But I mean, even with that, I mean, the fear that a lot of people have is, there's I think Kevin O'Leary may be one of them. There are people that are talking about we should completely do away with community and regional banks and just have a centralized banking system with, maybe the big five. Okay. And they should just control everything. That'll make it easier to monitor. Okay. There is a reason we have a decentralized banking system.
Right. I can see that coming.
Meaning regionally, people's banking needs can be different.
Right.
Now, Leary's argument, which I don't necessarily disagree with, and there's some merit. His argument is, the digitization of economy solves the problem. You don't need regional banks and so forth, physical locations, all of that kind of stuff, because anybody in a given region of the country can now digitally go to a bank and open an account and do banking anywhere they want to. Okay. Right. My problem with that is I don't want the entire banking system in the hands of a few.
I agree.
That you're asking for problems.
Yeah.
Okay.
We see what power does to people.
Well, sure. I mean, it's no different than the anti-monopoly laws that are on the books, right? When you centralize power in one corporation in a given industry, it squashes competition. It causes all kinds of problems. So, if you're going to do it in banking, do you honestly think the same thing is not going to happen, right? That it's not going to cause problems? Because they'll be able to write the rules for everything. There won't be enough competition, right, out there.
That's scary.
So, there's arguments for both sides, but I think the system, the way that it is today, is fine. The way that it's set up and the way that it is designed is fine. I think we as patrons of these banks need to educate ourselves.
Right.
We need to understand what the risks are to us, right? We can't do a lot to control what the bank is doing other than knowing and understanding and then spreading our risk around.
So tell me the questions I should ask the bank I bank at or going to bank at. I need to ask questions. What questions will they answer or will it make them mad that you're asking it? But what questions can I ask them and sound like I know what I'm talking about?
Honestly, Cindy, I don't even know that the average person, if you walked into a bank branch and you asked the branch manager, I don't know that they could really even answer the question. And I think the answer you would probably get is, I can't give you that information. I would have to get approval from corporate or whatever the case is.
Okay, well then I can't give you my money because I got to get.
Well, and that may be.
Yeah.
Okay.
But
I think asking a question like, look, I've been hearing the stuff on the news, okay, about the whole banking issue, and I'm kind of scared about that. And what can you give me as an assurance that you guys are, and you may have to get into some lingo, right? But what can you tell me that would give me some assurance that you guys are well capitalized enough that you could weather that type of a storm?
Perfect. I need to record that and write that down, and then.
Well,
that's-
luckily this is being recorded.
Yes, and they
I don't
can-
know if you knew that.
Yeah.
But we,
It's a good point. So you can go back on YouTube.
that's right.
If I can get this technology down, I'll be good. You can go back on YouTube and listen to that.
Yeah.
And that's what you need to go in and ask them. Because a woman going into the mechanics, and
Sure.
trying to tell them
Yeah.
what's wrong with my car, and I can only do sounds.
Yeah, I mean, another one would be, what percentage of your deposits do you have in cash on hand?
See, that's
Okay.
okay. Now they're not going to think I'm setting up to rob the bank or anything. If I
Well, no.
ask those
I'm not talking
questions.
about like sitting in a drawer behind the counter. I'm saying as a bank as a whole. I mean, there is a metric, there is a percentage. And look, a guy that's in banking in that line of business day in and day out. I mean, I kind of deal in the stock and investment and financial planning world.
Right.
So I know enough to ask a question reasonably, right? But I can't get into the nitty gritty minutia that somebody sitting behind a treasury desk might know to ask, right? Because there's all kinds of financial ratios and things that you can look at for a balance sheet that helps kind of determine if it's sound or not. But liquidity, cash on hand, what the value of their investments that they've made, meaning,
Have you
are you in
done-
the black or are you in the red?
Yeah.
What's it look like?
Oh, I
So,
like that. I like that one.
those are just good common things that you could ask, right?
Well, because if you educate yourself enough, just like you said, you're going to have a little more sleep at night and not be so worried about that, right?
Well, and I think so. And I think, I read an article, I want to say it was in, may have been a Fox Business article, okay? But there is a former FDIC chair, a lady named Sheila Bair, I think is how they pronounce the last name. I'm going to read you a quote
Okay.
that she said. She said, I think this is, meaning talking about the banking crisis we're currently still talking through. She said, I think this is more of a Bear Stearns moment. Now, she's referencing back to 2008. Okay?
Okay.
You remember the banking issue that happened in 2008, the mortgage crisis?
Right.
Okay. Well, if I look back at the signaling events of 2008, the Great Recession from 07 to 09, okay? That included the bankruptcy of Lehman Brothers,
Yes.
J.P. Morgan Chase's discount purchase of Bear Stearns when Bear Stearns, eventually went belly up, and also Bank of America buying Merrill Lynch, who also was in trouble. These were powerhouses on Wall Street,
Right.
okay? Well, in total, $443 billion in taxpayer money was put in to bail out these big financial institutions. Okay. Now, what's the difference
Wow.
between that back
Right.
then and what is happening today? Well, what we're being told is no taxpayer money will be used to backstop all these people that we're backstopping at SVB, for example, even though some of those include Chinese investors
Oops.
that they're keeping whole. Okay. Now, I'm not going to get political. I'm just saying
Okay.
there's issues there, right?
Oh, yeah.
But what I am saying is anybody who thinks that it's not taxpayer dollars, the FDIC is an insurance program that banks pay to be a part of. They pay a premium, right, to be in the insurance program. It all goes into a pool, right? Who do you think the bank is charging to be able to pay the FDIC premium? They don't pay that
taxpayer,
cost. They pass
right.
it through to you.
Of
Okay?
course.
It is always the taxpayer that is funding it. So anybody listening right now, don't believe the political what's a kind way to say
I know it. Bull.
don't believe the hype. How about that?
Right. I
That's a
love it.
kind of way to say
That's
it.
very way.
Don't believe the
very
hype.
good way.
So let me go back to Sheila Bair, right? So former FDIC chair. She's referring back to 2008. She says, I think that the current banking crisis is more of a Bear Stearns moment, meaning I think a lot of people, including me, back at that time, so she was with the FDIC at that time, said when they bailed out Bear Stearns, they increased moral hazard, meaning they created an expectation with the banks of further bailouts. And that's exactly what ended up happening with the whole Lehman Brothers issue is they created an expectation where eventually Lehman Brothers thought they were too big to fail
Yes.
because this
Yes.
other bank got bailed out. And so they didn't correct course or do anything to try to stay afloat. And they failed. Okay, because they had this false expectation in their mind
Right.
that, oh, well, they bailed them out, they'll bail us out. We're bigger than they are, and they were too big to fail, so they won't let us fail.
Right. Oh, I
Well,
remember that.
unfortunately, not so much.
Mhm.
Okay. Well, I mean, think about how many people that hurt. Okay. I think the bottom line is, fear right now is really setting in.
Yes.
Because there's obviously those of us that went through 2008. We saw what happened. Now we're seeing things again. And so people are wondering what kind of cracks are in the system, right? What is it behind the scenes we can't see?
Yes.
And the bottom line is, if you look at the way SVB went down, if there are cracks and if there are problems, you will not know about it until it's too late. They're not going to tell you until the night before.
Till the night before.
Okay, because if
In a
they do,
text.
it's going to compound the problem. If you know there's a problem with your bank, you're going to run in and try to get all your money out.
Sure.
Okay, they don't want that to happen,
No.
right? Because there is the off chance that, even if there are some issues, as long as they've got that liquidity, they can stay afloat, right? But my point is, as fear is kind of setting in, there's uncertainty there. And to me, by the federal agencies doing what they've done, all they're doing is compounding that issue. They're thinking that they're calming the fear.
Assuring
but what it's
everyone,
really
yeah.
done is it said, okay, well, you were willing to bail out these rich tech folks, okay, a lot of them who were political donors to your campaigns and everything else. Are you saying that if a regional bank fails, you're just going to let them fail now? Or are you going to just bail everybody out? You see what I'm saying?
Yes.
It creates an uncertainty.
And that's that won't happen. But it's funny. It harkens back to It's a Wonderful Life. And that was the first thing I thought of when they said there may be a run on the banks. And I was like, that can't happen today, for crying out loud. That's just no. And then the more you listen to it and you feed, it's really, I had turned it off once. I said, okay, that's enough, because when Charles Payne has a breakdown in front of everybody, meltdown, you got to be scared or something. But you've given us great ideas for, number one, just, calmly go in and ask your banker these questions, and to have them tell you. And if they won't tell you and they say it's none of your business, then you can maybe respond to that. But you've given us a lot today, and that's why we love you so much.
Well, the thing I want people to leave with, okay, if you could take one thing, maybe two things away, is number one, this is America.
Right.
And as Americans, we're these fiercely independent, or at least we claim to be, patriots, right?
Very.
We do not depend on government, or we're not supposed to, we claim,
Right.
for anything. Now, the truth is we do to a certain measure and degree.
Sure.
But my point is, you are responsible for managing your own business. Okay?
Yes, sir.
Get yourself informed.
Yes, sir.
And if that means calling your bank, calling a guy like me, whatever, all right? Inform yourself.
Right.
If you've got $1 million sitting in Bank XYZ and you're not sure how much of it is protected, it's time to get informed and to start asking a few questions, right? Because it is
Right.
possible you might be able to keep it all there
Right.
and have it insured, but the odds are you probably won't, okay? And if we're going to manage ourselves and manage our own risks, you need to be informed on how to do that and then go get it done,
Right.
right? Don't be the person that
Get
was
her
at SVP.
done.
That's it.
Just get her done.
That's it.
Thank you, Chris, for being here.
No,
Just
thank you for having me. I
And-
hope it wasn't too confusing.
No, and don't go any further than out there. Just wait for the next time we need you to come in. 'Cause poor Chris, he has so much going on. I'm sure you have plenty of people coming and asking you questions.
Can I say one more thing?
Oh, okay, go.
Do we have time? Don't panic. Don't fear. Okay? Just use your intelligence.
I love that. I won't panic or I won't fear, but I'll try and use Sam's intelligence. But anyway, thank you guys for joining us. And tomorrow we're going to be talking to Shannon, who is the person who knows everything about Conroe and what's going on in Conroe. And we're going to find out what you can be doing this weekend or next weekend. So be sure and be with us. She's beautiful. She's Conroe's treasure. So stay with us. Stay with us. And we will be back next Tuesday signing. Okay? Okay. That would be great. Thank you again, Chris, our sponsor. And we will be back. And first responders, we love you. We love you.
Every week, people ask the same two questions. Are they ready to retire? Will their savings last for their lifetimes? Hi, this is Chris Wootton with Wootton Financial Group. Our firm has been in Montgomery County for decades, but the hopes and dreams of the people we serve never change. We help answer these two questions and many more that people have about their uncertain financial future. We have a simple introductory client experience that allows us to get to know the client and includes a few meetings for the client to kick the tires at no charge. We provide a concise, one-page summary that helps the client get a better handle on which questions are the right questions for them. To learn more about Wootton Financial Group's process of helping their clients to a clearer financial future and to see their contact information, visit Cindy Cochran's show page on irlonestar.com/TCCS. Wootton Financial Group is a proud sponsor of the Cindy Cochran Show. Wootton Financial Group is available by phone at 936-449-5952 or visit them on the web at www.woottonfinancial.com. That's www.woottonfinancial.com.
This program is sponsored by the Wootton Financial Group. It is not the intent of Wootton Financial Group to render or offer personalized investment advice or financial planning advice through this radio program or any related website. Wootton Financial Group's participation in this program is limited to providing general information on financial matters and should not be construed as financial recommendation or investment advice. Investment advisory services are offered through Game Plan Advisors, Inc., a registered investment advisor registered with the Securities and Exchange Commission and the state of Texas. Insurance services are offered through Wootton Financial Group, Inc. Game Plan Advisors and Wootton Financial Group, Inc. are affiliated through common ownership, and neither firm is affiliated with The Cindy Cochran Show. No listener should assume that any information presented and or made available on this program serves as the receipt of or a substitute for personalized individual advice from Game Plan Advisors, Wootton Financial Group, or any of their